Welcome to 2026, and a lot of people are already starting to ask, all right, we're in January now. What does that mean for real estate? So today we're going to talk through inventory. We're going to talk through interest rates. We're going to talk through inflation. We're going to talk through the trends in the market, what's changing, because there are things changing. That way you have the information right now, and you can make the best decision that you need to. What's up, everybody? Welcome back to Real Talk Real Estate. I'm your host, Mark Cannon, local realtor here in the Phoenix area with my home group real estate and owner of the Benchmark Real Estate team. As always, guys, this is a podcast format, so I'm just here to be real with you, here to be transparent with you. I'm not editing what I say. I'm just here to be real with you and share everything with you so that way you have accurate information and you can make the best decision possible. So, Happy New Year. It's January. I know it's hard to believe. I have to apologize. I had said I was going to put out a video of my bold predictions for this year, and it didn't happen. I got really busy with clients and family and lots of different things in December, so that will be coming out next week. So be looking for that video that I'll be sharing. But today we're going over the market trends, what's happening. And stuff has changed since December. December is one of our slower months where things slow down because in between Thanksgiving and Christmas, it's just not a whole lot of people do stuff. People pull their homes off the market. People stop looking for homes because they just take a break during the holidays. But as we're starting to get into January, we're going to see those numbers start changing, and we're going to start seeing some of that data today. So first things first, where do we always start is inventory. So I'm going to start pulling some stuff up on my screen so I can see it. And I'll be sharing stuff on the screen with you guys, obviously, so that way you guys can see it as well. So first things first, where are we? Inventory. We are sitting just below 23,000 homes. Interesting. We were last month at the beginning of the month, we were just below 24,000. So we've come down about 1,000. Now, is that concerning? No, it's the holidays, people pulling the house off at the end of the year. They don't want to have the house sitting there anymore. A lot of people are probably going to end up relisting in January, February, and March. And we're probably going to get back to what's called the dually curve. And I'll share that on the screen. The dually curve, we had seen that, what's the word I want? Trend, that market trend for year. I mean, from the 50s until 2019, then COVID messed all that up, where the dually curve got messed up, the normal flow of real estate got messed up. And we think it's going to come back this year. We think we're going to see a lot of listings, a lot of buyers come back in the spring, hopefully. And that's where we'll see some movement in those numbers. So obviously the inventory's come down some. That's not a bad thing for sellers. It's not a bad thing for buyers because we still have a good amount of inventory. So just pointing that out to you. We'll go over some Cromford data here in a little bit, but wanted to also show you the interest rates. So when we're looking at interest rates, we'll look at conventional loans. We're sitting at about 6.2 right now. So that's good. Hopefully that number continues to come down. You can see overall it's starting to come down since the summer. I mean, the summer we were up, closer to 7%, about 6.9. So we're starting to come down. Hopefully that continues to come down because pretty much the people I'm listening to are saying, once we get below 6%, if we get below 6%, a lot of people are going to start coming back in the market. Now, who knows when that's going to be because the market's going to fluctuate. And you can see the interest rates are fluctuating up and down. So we were at 6.19 yesterday. We're at 6.2 today. So something to be watching. FHA, we're sitting about 5.8%. So 5.85, somewhere in that range. And I'm also seeing, we're starting to see a lot of like those first-time home buyer programs where they're offering, like I just saw an offer on one of my listings, you put the 3.5% down, 5% down, and you're getting a 5.5% interest rate. So something to be paying attention to and something to be looking at because there are some programs out there that lenders offer. So if you have more questions on that, let me know. More than happy to connect you with a good lender. So let's also talk about inflation real quick. So obviously the government shut down. We stopped getting information. So October, we didn't get any information. November came in at 2.7%. Now, we don't know what December's at. We'll find that out. I think, it says right here, January 13th is when we'll find that out. So we'll get those numbers in. But when I already did the math just on the numbers that are currently there, we averaged about 2.7% for the year last year, which is a little bit lower than it was in 2024. So that's a good sign. Hopefully it continues to come down because we want it to stay as close to 2% as possible. That's the goal. And we'll see if that happens. I am unsure of that. But, all right, so we talked through that stuff. Let's talk about, so I'm going to show you some of the Cromford data to show you the market trends. And I'm also going to show you all this stuff is going to be from Cromford, which is the company I pay for here that they do all the market data in Phoenix. And I'm going to show you a couple different things. I'm going to show you some supply and demand numbers. I'm going to show you the trends for last year as far as equity growth in price per square foot. So I'll show you some of that real quick. But first, I'll show you their index. Now, as I always tell you, with the index is anything between 90 to 110 is a balanced market. Below 90 is a buyer's market. Above 110 is a seller's market. I tend to disagree a little with their numbers, because it makes it seem when you see markets in sellers markets, you're like, oh, it's booming. They may or may not be. And that's where I think a lot of markets are leaning balanced. There are some in sellers. Fountain Hills, Chandler, Gilbert, Scottsdale, definitely more of a seller's market. But you're also going to see places be more balanced where you're still going to be able to negotiate some. It's not like you're having 20 offers on one house. There are houses that might have that, but overall you're not seeing that necessarily. But then you go into the other markets where, Glendale, Paradise Valley's come down a good amount. Peoria's come up, which is good for sellers, but you're seeing a lot of green on this screen. I mean, there's only 2 that aren't green. So that's a good positive trend as of January 1st. So that's good, and that's good for the market, and that's hopefully where we're going to see more buyers coming into the market. So let me show you some other Cromford data real quick. This is the change in annual average price per square foot, and this is for last year. So last year, it's going to show that the upper, because you'll always see people online, and to me, it's a little dishonest, because they're like, look, we had positive equity growth. We grew 3% last year. Okay, yeah, but you're considering all price ranges. And when you look at Fountain Hills, when you look at Scottsdale, Paradise Valley, those are $1 million properties. Of course, when they're growing at 7.9, 5.2 at those upper ranges, that's going to skew things a little bit. But when you get below 700,000, they're all negative. Now, not by a lot. I mean, the biggest one is under 300,000, which is 2.3%, which is mostly in Phoenix. It's going to be your townhomes, condos. There's not a lot of single family homes under 300,000. So it's one of those that we're seeing homes under 400,000 are negative 2%. Okay. So negative growth in price per square foot. So something to be paying attention to. Price per square foot's not, doctrine by any means, but it does show an indication of things below 700,000 have been declining. So something to be paying attention to for sure. Some of the other things I'll show you, and these are more just, market screenshots, I'll kind of show you. So like, for instance, Peoria. Peoria looks pretty balanced. You look at your supply index and your demand index, it's a pretty balanced market in Peoria, which means you can still negotiate, do different things. So then, like, you look at, let's say, Phoenix. All right, fairly balanced, maybe a little bit more on the seller side from the demand and supply index. Okay. So let's look at, let's say, Surprise. If we look at Surprise, it's more of a buyer's index. You can see it there in the red, 67.9. That's a buyer's market, right? So then you can see some of these other ones where I'll show you, like, let's say Glendale. That is more of a balanced market, maybe a little on the seller's side. But then you look at Fountain Hills, heavy seller's market, according to their data with supply and demand. Okay, so again, real estate's all about supply and demand. All about supply and demand. Scottsdale, where's Scottsdale? We'll show Scottsdale. A little bit more into a seller's market. So supply and demand is going to run most of this stuff, because we're looking at, when you're looking at real estate, supply and demand, if you have high supply and you have low demand, prices come down, which, okay, below 700,000, they have been. But then when we see more demand, especially if interest rates continue to come down, when people are saying, okay, if we get below 5.8%, we're going to see people come back in the market because they can now afford some of these things. So something to be paying attention to, because that is going to matter. And when we look at all this data, and this is what we have to remember, when we're looking at this kind of data, does it mean that the market's falling apart? No, it's not. We still have healthy amount of inventory. We're not crazy too many homes on the market. It'll be interesting to see as we get into the spring, when we're supposed to have a spring selling season. Okay, we have more sellers come back in the market to resell their homes. Do buyers come back in the market as well? Because if only sellers come back in, supply is going to rise faster and demand's not. So we need demand to do it. So that's what we're really looking for is, okay, what's the trend? Right now we're seeing demand starting to rise. So that's interesting to see. And that's, I think if interest rates do come down, I think that's what we're going to see. I think we're going to see it balance out to where we go more to a balanced market. Does that mean we're swinging into a seller's market? It's going to be crazy? No, I don't think that. But we also have to pay attention. In May, the Fed chair will get replaced. Okay. What do? Do they slash rates? Do they not? We'll have to see, because if the Fed continues to lower rates slowly, I think they won't have to slash as much or do as much, hopefully, because I don't want them to have to slash stuff. I don't think that's going to be helpful. So it's one of those that if rates continue to come down, which I think they will this year, again, I think the best case scenario will be in the mid fives. I don't think we're going to be below 5% or anything like that. If we are, great, but I don't expect that. So that's where we're starting to see buyers coming back in the market. The trend is showing there that, okay, we're seeing demand rise a little bit. That's good. Let's see if it continues to trend that way, because if it does, then we'll get back to more of a healthy market for sellers and buyers. Right now, buyers have an advantage in most markets. So if you're thinking about buying or selling, you're not sure what to do, let's sit down, let's go to coffee. I'd love to talk with you. I'd love to just talk through things and see what's best for you. Because again, I'm real estate through relationships. I put the relationship first. I want to make sure people are taken care of. So guys, I'm here to help however I can. My information is right here. If I can help in any way, I would love to. Guys, you've been listening to Real Talk Real Estate. I'll catch you next time.